Okay, so we're going to take a look at Meta, which just recently put out its Q1 2024 results. Meta, of course, is the owner of Facebook, Instagram, and WhatsApp. It's the largest social media company in the world. They had also recently, the name of the company was Facebook, but they changed their name to Meta as part of their transition of focusing on the metaverse or virtual and augmented reality. They invested a lot of money in that, both from a branding perspective and from a technology perspective. So right now the company is trading at a price of $460. It's a $1.2 trillion market cap. They're one of the mega cap 7 companies. So very influential in the market. Yielding a little bit, but only about 0.1%. So fairly insignificant yield. Now, I actually did a Your Stock Our Take on Meta when they put out their Q4 results, but I decided it was probably time for us to take another look at the company, just given the market reaction to the company's Q1s. So the first quarter results were released on April 24th. And subsequent to the results, the stock pulled back about 13%. So obviously the market was seeing something that it did not like. Now, previous to the release of the results, the company had a tremendous trend of growth over the previous year, one of the top performers on the market, and very strong Q4 results, which put the year-to-date numbers at a high level. But why don't we take a look at the Q1 results and see what's going on here and see what it was that the market was seeing to cause the share price to fall as it did. So Q1 2024 results, revenue was 36 billion. That was up 27%. Income from operations up 91% to 13.8 billion. And then the operating margin, a big increase, 1,300 basis points to 38%. Earnings per share of 471, up 114%. So at face value, these numbers look incredibly strong. What was it then that caused the share price to decline after the release of the results? Well, what the issue was primarily was weaker than expected revenue guidance for the second quarter of 2024. So the company issued Q2 2024 guidance for revenue between 36.5 and 39 billion. That's 37.75 billion at the midpoint, and that was just moderately below, about a half a billion below what analysts were forecasting for Q2 revenue. So when we look at the midpoint of the forecast, that would equate to about 18% year over year revenue growth in the quarter. And that compares to 27% revenue growth in the in the first quarter of this year, the one that just came out, about 25% in the fourth quarter of last year, and 23 in the third quarter of last year. So we've seen a decline in the growth trend here. That's really what has the market concerned. Now, I think this is somewhat of a fickle reaction, because in spite of the fact that revenue growth is trending lower, it's still fairly strong, looking at growing about 18% year over year. And I can't imagine that many investors would have been expecting that revenue growth would just continue to trend at 25+% for a company Meta size. Most rational investors would understand that growth rate would moderate over time. In addition, the guidance for the year as well. I mean, the high end of Meta's growth forecast or revenue forecast for the second quarter is actually above what analysts were estimating. So, but this is just an example when a company has a huge run. If there's any level of disappointment, that a lot of people that have made money, they want to take profits, because they're kind of betting on more and more good news and an acceleration of the trend, as opposed to a slowing of the trend. So one of the things that is a major focus of Meta right now, I would say the major focus of Meta right now, is artificial intelligence. Of course, every company seems to be focusing heavily on artificial intelligence, but Meta is one of those few companies that actually has a very strong competitive advantage within this space. So they've announced that they're significantly increasing their investments into AI into 2024. They're planning a $35 to $40 million investment in AI related activities. So one might ask, well, why is Meta focusing so much on AI now? Well, there's three reasons that we would focus on here. One is to directly improve its existing products. Um, and that would be Facebook, Messenger, WhatsApp, Instagram. So using AI to augment the user experience there. Another is developing new products and services. So they want to look at developing new AI powered virtual assistants, AI generated content, all with the focus on supporting their existing infrastructure and business. And really, it's necessary for them to invest heavily in AI at this point in order to keep up with other tech giants like Google, Microsoft, and OpenAI that are making huge strides in this space. So now, in the past, Meta's focus was on the metaverse. That was what they targeted as like the big growth engine for the company, even changing the name of the company to Meta. But now there's a lot less talk about the metaverse. The investments that they've made into augmented and virtual reality have not really paid off. We've not really seen much of user adoption in that space. And now they're shifting here to have more of a focus on artificial intelligence. But I will say that their focus on artificial intelligence has been very successful so far. The company just recently released in May um, their Llama 3 AI model. And this is the state of the art for open source large language models. It's actually competitive with ChatGPT and GPT-4, although it is substantially smaller. So there's two versions of Llama 3. There's the 8 billion parameter version. There's the 70 billion parameter version. Now compare this to GPT-4. I don't believe that they officially disclose how many parameters are in the model, but the estimates that I see are about 1.5 trillion. So quite a bit bigger. I won't get into the technicals of what a parameter in a large language AI model is, but the mentality of the past was that bigger is better. But now we're looking at a model with 70 billion parameters that is in many ways competitive with GPT-4 at 1.5 trillion approximately, and is exceeding GPT 3.5, which I believe is about 170 billion parameters. So that's a huge advancement. And the great thing about Llama 3 that a lot of people love is that it is open source. So as opposed to the OpenAI models, those are closed source. You can access them through an API, but you can't take the models onto your own system and train it and work with it, fine tune it. Whereas with an open source model, you have a lot more latitude to actually just take control of that model and do what it is that you want with it. But I've tested the Llama 3 model. I was quite impressed given the size of it. And, in the past, I've just found the open source models have not been as quality as what OpenAI, the Chat GPT and the GPT-4, but Llama 3 appears to be right up there. So I was quite impressed. And the great thing, anybody can go and test it out anytime they want. You just go to www.meta.ai. You may need a Facebook account. I'm not sure. Most people have that, so but you can test that, do image generation, all sorts of things. But now getting back to the financials, in terms of what the company is expected to do going forward. So analyst consensus, the midpoint of the consensus estimate for 2024 this year is $20 per share. That would be growth of 35% over last year's earnings. And then looking forward into next year, 2025, analysts at the midpoint are expecting 15% growth to 23.10 per share. So this puts Meta's stock right now at about 23 times earnings based on current year's estimates and 20 times based on next year's 2025 estimates. So what is our take on Meta? Well, I mean, it obviously has a leadership position in social media. It's propelled itself to the forefront of AI research, arguably the best open source model available right now. Highly profitable company, great track record of growth. It also has a cash rich balance sheet and it's trading at a reasonable valuation. So a lot of good things to say about the company. On the other side, social media trends, they can be very fickle. I've talked about this in the past. There's fewer young people on Facebook, more so on Instagram, but it's actually all of the young people that I know through my family seem to be into TikTok and Snapchat, and not so much into Meta's Facebook or Instagram. So that's a concern. How do these social media tastes trend? And as young people take over the market more and more, do we see more of a migration away from Facebook and Instagram? There's regulation. There's always regulatory hurdles. A big spotlight on social media companies. One of the things happening right now is there's recently legislation passed in the United States, which is forcing TikTok. I believe it's forcing the parent company of TikTok, one of the biggest competitors to Meta. It is owned by a Chinese-based company, so it's forcing them to divest their U.S. business, or it faces a ban in the United States. I don't know where that's going to turn out. There's concerns about security here. This can work two ways for Meta. One, it reduces Meta's competition in the U.S. market if this were to actually happen. But it also opens Meta up to further scrutiny as well, because there's other factors in that legislation that could impact Meta negatively potentially. And then, of course, there's retaliatory measures. Typically, when one country issues regulations that benefit a company that is based in that country, then there's retaliation. I don't think that Meta is very big in China. I know that they are in China with restrictions. But that's something that is a concern, is the regulation. And then there's the substantial investments that they have to make into technology. Right now, it's AI. Before it was metaverse, they made a big bet on the metaverse. It did not seem to work out. Maybe it does over the next 10 years. But they have to constantly be investing in their technology and trying to figure out where the trend is going. So right now, AI is the focus, but very uncertain outcomes. A lot of money being invested in that technology. But even Meta confessed that it may take time before any of that is apparent in terms of value for shareholders. So you just don't know. And in terms of competition, there's just so much competition in the AI space, and things change very quickly. But our take on Meta, really, if you look at the company, the numbers, it is a fundamentally strong business. It does fit the GARP model, growth at a reasonable price. So, I wouldn't argue against somebody who wanted to buy it. We do have a couple other companies that we prefer within the mega cap 7 that we're sticking to, but certainly Meta has some good characteristics.
Yeah, I definitely think like the Llama 3 is pretty interesting. Like I saw actually just on my way back from Vegas that they had updated. If you go to the top of Facebook or the top of Instagram in the search, it shows where you can ask the Meta AI essentially, or the Llama 3 anything. And like just for a quick example, I'll show my screen here, or get Brett to pull up the images. But so. Basically, I asked it, imagine a race or a car race on Mars. Here you go. So it gives me, an image of a car racing on Mars. I said, change to a Subaru racing on Mars. And then it gives me, a brand new STI, or one of the new Subaru WRX STIs racing on Mars. So it's pretty interesting. And it did a pretty good job. I was actually pretty shocked at how quick it can do it. But anyways, just to show what it can do.
Mm-hmm. No, that's interesting.
You should have put yourself in that Subaru.
Put Brennan.
Imagine Brennan in the Subaru on Mars.
Yes.
You could never imagine Brennan in a Subaru. It wouldn't happen.
No, it wouldn't happen. No, it's true. All right. Yeah.
On their actual like the metaverse hand, it's actually interesting because Apple, with their Apple Vision, is in the same augmented reality space. So you have virtual reality, then augmented reality, which is placing it over the real world. So Meta doesn't have any augmented reality, I don't believe, but they do have VR, and they would probably push into augmented reality. Apple actually, they cut their forecast of their Apple Vision Pro from about 800,000 units for 2024, 2,400 to 450,000. So they cut it in half of what they're expecting to sell. So AR, at least at their $4,000+ price tag, isn't really selling to many consumers. It's not selling it as well as they expected. And I think that's a trend. It's a hard thing to sell. I've talked to Brennan about this many times. It's something very different than a phone, because at this current point, is because you can't have it on. The Apple Vision Pro only has a 2-hour battery life. You can't have it for 12 hours a day. It's not attached to you in the same way. And I think that's what many people who were really in the metaverse, who thought like that your VR goggles or whatever, they've become like a new phone. I don't think that's happening, at least at this current technology level. So Meta, for example, they've invested $46 billion since 2021. That's the headline number I could pull quickly, at least, when they bought Oculus, which is their VR division, a decade ago in 2014, they paid only $2 billion for that. They've invested over 20 times as much. And I was hearing more headlines around that 2014 timeline about Oculus than I do for the augmented reality or virtual reality these days. So it's interesting to see like the consumer demand and interest in it. At least in my opinion, what I've seen personally, it seems to have dropped off for even though they've spent over 20 times as much in the last few years. Like it's actually interesting how that's played out.
Yeah, I mean, maybe the technology has to advance to the point where, you know, the headset is more like a pair of glasses, so somebody can actually just walk around with it. And then maybe that, you know, the phone powers it through Wi-Fi or something. But it's you know, it's interesting because I heard a speech from Sam Altman, who's the CEO of OpenAI, and he was talking about the difference between like a true trend and a fake trend in terms of like a product. And he actually used virtual reality as an example of a fake trend. And the way that he described it is that, you know, a real trend initially doesn't need to have that many users, but the users that it uses that product a lot, right? So when the iPhone first came out, it didn't really have that many users, but whoever owned the iPhone was basically married to it, right? Whereas, you know, a fake trend is one that everybody talks about. It may have a lot of adoption in terms of like a lot of people have the product, but they don't make it a part of their life.
They don't use it enough.
Yeah, and exactly. And that's kind of the example that he gave with VR, is that he knew, you know, countless people that had VR headsets, but they just didn't seem to be that obsessed with them, right? So I thought it was a good way of looking at it.
I mean, I'm an example of that. I have one, and I haven't probably used it in a year and a half.
There you go. So there you go. Right. Yeah. Whereas I can say there was almost when the iPhone first came out, I mean, different thing, but whoever had an iPhone, nobody was saying that they never used it. They were basically trying to find ways to spend more time on it.
Or your BlackBerry, right? Your Crackberry.
I had a BlackBerry.
I did as well, actually.
Yeah. Well, everybody used the hell out of them too, right? So it was, at that
I remember
time.
BBM, which was like their messaging went down for like it was like a week or something.
Over.
And it was over.
The world fell apart.
The end of it. Everybody was started switching to iPhones in grade 10 and 11.
The only other trend that's as powerful is our mugs, and I can see Aaron. He can't even put it down.
You know, there you go. It's it doesn't have as many, you know, owners as the iPhone, but
no, but when they get it in their hand,
you know, they're obsessed with the mugs.
So keep your questions coming in, and you too may experience one of those mugs, right? And if you've got any questions you want us to, or polls you want us to do, you know, send those in as well, and we'll put up a poll as well, because we're always thinking of new ideas and we always need more. We're getting tons of questions in for Your Stock, Our Take and all of those. But if you want a poll, or if you want us to battle about a company, let us know.